Welcome to the NEOS Monthly Income Podcast. I'm Tom Lydon, and joining me, as always, are the founders of NEOS, Garrett Paolella and Troy Cates. Gentlemen, welcome and great start to the year.
Thanks, Tom. Great to see you.
Good to see you, Tom.
Great seeing you guys as well. Boy, you guys have been busy so early in the new year, launching some new products. Talk a little bit about these new 3 boosted products, what they're all about. Troy, you want to start us off?
Sure. So we had an opportunity to launch our boosted series, which we've had in the works for quite a while. And we're really excited about this suite of ETFs. So we launched 3 ETFs. We launched boosted or levered versions on our 3 most popular ETFs, SPYI, QQQI, and BTCI. So we really wanted to cover the S&P 500, the NASDAQ 100, and of course, Bitcoin with BTCI. And what this boosted series does is it gives you the opportunity to have additional leverage with inside the ETF, which could potentially over time give you greater returns. Of course, there's always a risk there in any levered product, whether it's one of these boosted series or another, that when the underlying reference asset like Bitcoin or the S&P or NASDAQ moves lower, you have that levered exposure. You could potentially do worse versus the underlying reference asset. So that's important to know. I think as we talk to people about the boosted products and having that risk on a little more than the core product, it's important to understand the risk that you're taking for that potential of additional total return, which might mean also a higher distribution over time.
Garrett, when Troy talks about boosted, give us some reference. There's leverage, there's boosted. We hear about leverage and inverse out in the marketplace a lot. Some's a small amount, some's a large amount. Give a little reference.
We like to use the word leverage to explain, obviously, very contextually what it is. However, we didn't use leverage in the name because we do think a lot of investors think about leverage as those daily levered traded products. Like our boosted version is about long time, compounding returns and not having to have a traded product, like your 1x, 2x, 3x, like type products that you see in the marketplace where they're really meant to be bought and sold, intraday. This is about long-term holds and you want to just add more exposure. I think in talking with a lot of investors and advisors, we realized that we had our core offerings, as Troy mentioned, SPYI, QQQI, BTCI, right? Those are giving you a core covered call strategy that inherently lowers volatility, right, and produces income. We also have our hedged versions. So the idea is you're giving up a little bit of that income to buy that downside protection. And so investors came to us and said, well, what if I want more, right? I don't want to lower the volatility. I'm looking at the volatility of more of my full equity exposure like the S&P or the NASDAQ. I want potentially more income because my total return can be higher. And so we're really targeting that enhanced, that boosted version for the ability now to have the suite perform more on the upside, having that kind of core cover call strategy in the middle and the hedged version, on the downside. And so as I think we look at it, it's more of a monthly reset when we're resetting all of our options positions. We're looking to reset the leverage factor. It tends to target around up to about 150%, but there's flexibility in that, right? It's really model driven in order to kind of just target that, enhanced exposure, as Troy was mentioning, to seek, further total return of the equity components or Bitcoin in these products.
Okay, so what I'm getting from that is long-term target 150%. There's nothing obviously guaranteed about it. Also, if the market's going up over a longer term period of time, the goal is to get higher income and higher on the underlying. Is that right?
That's correct. Then the core products like SPYI, QQQI, right? It's not leveraging just the long only S&P. It's looking to add a bit of leverage to our existing kind of core, more popular products.
Troy, you guys do a great job explaining the systematic process that you use on your other ETFs. Is this different? Can you explain a little bit more about how you're executing?
Yeah, so very similar to our other products where we're using a rules-based strategy that we follow and dictates when we're rolling, how we're rolling these options. To think about, just to break it down, the S&P 500 boosted product and the NASDAQ 100 boosted product. So think of them very similar to the core product. So we'll use the NASDAQ 100 boosted, for example, long all 100 names of the NASDAQ 100, still using NASDAQ 100 index options. We're still selling those calls out of the money, very similar to QQQI. What's different about this product is we're adding that boosted portion, that levered portion, as Garrett was talking about, and we're doing that synthetically with options. So we're basically putting on what's a synthetic long or a put call combo where you're buying a call, selling a put, same expiry, same strike price to give you that added notional exposure. And then we are adding to the already short calls that we have to bring in a little bit more premium than the core product. So you get that added leverage, and then you get the added premium coming in that can be distributed out. So for us, it made a lot of sense as Garrett was walking through to think about how these could be more longer term holdings than just an intraday traded product that might use different types of exposures, whether it's through swaps or otherwise. We really wanted to harness the options market and what we know best.
So, Garrett, investors love the monthly income. They also love the monthly income in a tax efficient way. Can you touch base on the tax efficiency? And is that something that's also somewhat expected here?
As Troy was mentioning, a lot of our model is very similar, minus the addition of the boosted or the leverage here. So we're still using a 1256 index option. So those are those, S&P 500 index options, Nasdaq 100 for those two. As we all know right now, the Bitcoin product does not get a 1256 option treatment, but what we do still embed within our overall rules-based approach, is ability for tax loss harvesting. So when we're going to rebalance the option positions, on a monthly basis, we're ability to capture losses that can be used towards the benefit of the fund. So all of those same structural, elements at the core products that people know will still be here. And then you're adding in that synthetic long, and that synthetic long that Troy talked about is still using those index options, across all three products. And so we'll look to then be able to add to that total return component, with those index options for each three product.
As far as the distribution schedule, you've enhanced the distribution schedule for the whole suite, kind of balancing them out as opposed to getting all the distributions at the end of the month. Where do these new products line up in the schedule for distribution?
Yeah, it's important to know that we're still keeping all of our products as monthly distributions. We're not changing that up. But yes, we are dividing up the different suites throughout the month. So week one is going to be the boosted ETFs. Week two is the fixed income. Week three is all the high income, which was traditionally where we had everything in that third week of the month. And then week four is the hedged products. So the idea is operationally, it makes it a little easier as we grow the suite of ETFs. We have 19 ETFs now, and it helps there. But there's also, a lot of people own a lot of our different ETFs. So there's a chance that you could get paid more than once a month if you're owning different suites or different parts of the NEOS products.
Garrett, you mentioned you talk to investors all the time. You get some feedback. There's requests. Talk a little bit about these boosted products and where they fit into the existing lineup as investors are thinking about balancing out their portfolios.
Yeah, I think that's a great question, Tom. And that's really where this has been built off of, is like where it fits within the portfolios and what investors are looking to do. I think as some of our audience or the ones that know us well, we're really looking to be a solutions provider. So we want investors to choose their risk, their income and return tolerances, or their ability to choose different asset classes and exposures within our product suite within their core portfolio. And so this fits in that higher octane, more equity like risk. And so if you think about traditional cover call strategies as a whole, they're designed to, lower volatility and produce, current income. Obviously, we focus here on trying to make that as tax efficient as possible. And so for boosted, this is going to be more risk on. It's going to use leverage to really seek to give you more upside and more total return than what a traditional covered call product would be. So I think for covered call investors that know and understand you're giving up a little bit of that upside, to generate that current income, these strategies are seeking to aid in participating back right in that upside that traditionally had been given up by selling, out of the money calls on a portion of the portfolio. So as you think about it, it's definitely fitting within the equity bucket of your portfolio. It's going to look more high risk, more total return than a traditional covered call would, probably more similar, to just full on equity exposure. And so we wanted to be able to add that for the investors that either, for a period of time or just structurally on a static position, want more exposure within their equity portfolio on the upsides, which also can come with the, potential ability to have more income off of the portfolio. But now we kind of round out that suite, more risk on in the boosted, the core covered calls, and then the hedged equity income, for people to all espouse their views or a mix of the three to kind of target a certain risk or return level that fits within their estate planning goals.
That's great. Well, guys, congratulations. It's exciting. They've been well received and looking forward to continue to track them. Before I let you go, Everyone's getting geared up for tax season. We know 1099s are coming, and that means a lot if you're a investor in NEOS ETFs. The big question is what percentage of your income is tax efficient, and that will be a part of the 1099. In the next podcast, guys, we're going to dive into that a little bit more. What are some of the things that we're going to cover in the next podcast that'll be important for investors?
Understanding, that return of capital piece that'll come out in those numbers. I think that's really important to understand how it works, what it means in your 1099, and kind of break down the numbers for each product, whether it's you're holding SPYI for the past few years or it's one of the newer products and what that looked like for, the first 6 months, for example, of the product being out in the market.
One thing I'd also add, though, I think there's always a lot of questions on there's certain regulatory documents that are just available every month, in these types of products. Are they something you should be following? Most of the time, they're just regulatory compliance documents as opposed to a tax document. So I think, in that episode, we'll also make sure we cover what the various documents are that people are looking at, on a more continuous basis throughout the year to make sure that they fully understand what they are, or what they aren't, and helping you understand the taxation, within these types of products, us or others, because we're all in the same regulated industry and have to do the same thing. Obviously, products and their performances are different, but those regulatory documents and things are the same. So make sure investors understand what they are and how they can be helpful or not helpful in thinking about, what your current tax bill might be.
Yeah, it's a great point. And Garrett, with that, we're going to be able to share a little bit more about where those documents are because you share them on the website. So maybe we'll dive into a little bit more about the great information you guys provide on the NEOS website. This has been fantastic, guys. Again, congratulations on the launch. I'm excited for you and for all of us, and looking forward to the next podcast so we can dive into the tax efficiency that much more. Thanks again, and we'll see everybody on the next month's monthly income podcast.